Gold has just closed at a new all-time high, and the strong weekly candle is extremely bullish. But here's the real question. Is gold breakout 5,000, or is a sharp correction coming? Most traders miss gold's biggest moves because they don't understand the deeper forces driving this market. In this breakdown, I'll show you how smart money is positioning, the 3 key macro forces shaping gold's next move, and my precise trading roadmap for the week. If you trade gold seriously, make sure you're subscribed. This breakdown will change how you see the gold market. Macro outlook. 3 key forces driving gold. Force number 1, US dollar dynamics, DXY. The US dollar remains the most important counterforce to gold. Understanding its next move is critical for gold traders. DXY technical breakdown. Starting with the weekly chart. On the weekly time frame, DXY printed an extremely bearish candle, completely erasing the rebound of the previous 3 weeks. This suggests a high risk of further downside after a short consolidation phase. At the moment, price is testing a long-term rising trend line. DXY may experience a technical bounce, but the broader bias remains bearish, with a likely move to retest the 96 support level. If 96 holds, DXY could stage a recovery. However, a clear break below 96 would open the door for a much deeper decline, with downside targets at 94.5, 92, and potentially 90. Zoom into the daily chart. On the daily chart, DXY posted a strong bearish candle, closing right at the descending trend line and the horizontal support around 97. For DXY to recover meaningfully, it would require either a prolonged accumulation phase or a retest of the 96 low to rebuild bullish momentum. At this stage, traders should closely monitor price action around 97, and especially 96, as these levels will be critical in defining the next major trend for DXY. Here's the catch. DXY's next move won't just impact gold, it could rewrite the short-term trading landscape entirely. The dollar is the battlefield where gold reacts first and everything else follows. Force number 2, geopolitical risks. While DXY drives the immediate moves, geopolitics remain the deeper structural force supporting gold's long-term strength. Recent developments include reported U.S. military actions and the detention of Venezuela's president, marking a clear escalation in geopolitical risk. At the same time, President Donald Trump has expressed intentions regarding U.S. control over Greenland. Meanwhile, Russia-Ukraine peace talks have shown some progress, but no agreement has been reached. Until a concrete resolution emerges, uncertainty will continue to support gold as a safe haven asset. This isn't just political noise, it's a clear escalation in global tension, and gold consistently reacts to these developments. Now let's look behind the charts at the institutional flows shaping gold's next move. Finally, institutional activity. While retail traders are still debating whether gold has already peaked, institutional players tell a different story. Over the past week, after taking profit by selling 8 tons of gold, major gold trusts have returned as buyers, adding 9 tons as the US dollar index, DXY, weakened. This aggressive accumulation has increased total holdings to 1,086 tons. Most importantly, they are still holding a large core position accumulated earlier. Both the weekly chart and monthly chart confirm this behavior, signaling that these institutions still expect higher gold prices in the medium to long term. When capital of this magnitude shifts, retail traders often get trapped chasing moves too late, and that's when the real game in gold begins. Institutions don't predict, they position. These activities suggest that institutional players are positioning for a move towards 5,500, with a potential extension to 6,000 before taking profits. The approach also helps hedge against a possible Ukraine peace deal and a potential rebound in the US dollar. This is how institutional capital manages risk, scaling exposure strategically, not chasing headlines or short-term price moves. Now that we understand how capital is moving, it's time to turn to the charts. Let's zoom in and see what gold is really telling us. Gold technical analysis. First, congratulations to everyone who acted on October 29, 2025 analysis by buying 3,900, and now they're enjoying gains exceeding over 10,000 pips. We called this move from 3,900 before it even started, and that's the power of understanding market structure. We shared lots of setups earlier in our Telegram group before market move. That's why it's crucial to subscribe to the channel or join our Telegram to get real-time updates so you don't miss the next major wave in gold. Now, let's zoom in to the charts. Monthly, weekly, daily, H4. Step by step, here's what the market is really showing. Starting with the weekly time frame. Since bottoming at 1,600, gold has surged to 5,000, a move of nearly 34,000 pips. This rally was fueled by three converging forces. The dollar's drop from 114.6 to 96, geopolitical risks in Ukraine and the Middle East, US and Venezuela, trade tensions under the Trump administration. Ask yourself, how often do we see such perfect alignment? It could take more decades or never happen again. At this stage, peace in Ukraine remains elusive. Tensions between the US and Venezuela are escalating. Ongoing central bank accumulation and global markets have yet to find solid footing, all of which continue to support gold's upside momentum in the coming weeks. However, a strong rebound in the US dollar DXY could easily trigger a sharp correction in gold from current levels. On the other hand, if the DXY continues to consolidate or weaken, gold is likely break out 5,000 to move towards 6,000 and potentially higher in the long term. On the weekly chart, gold closed the week with an exceptionally strong bullish candle backed by very high volume and settled near the 5,000 level. Buyers are clearly in full control, supported by a weakening DXY and strong fundamental drivers, including geopolitical tensions and trade and tariff insecurities under the Donald Trump era. With this level of momentum, gold has a high probability of breaking out above 5,000, opening the path towards 5,500, 6,000, and in an extended bullish cycle, even 10,000 in the long term. Shifting down to the daily. Now let's look at the daily chart, the clearest window into gold's next move. On the daily time frame, gold has recorded 5 consecutive strong bullish sessions, which is highly impressive. Price is currently testing the major psychological resistance at 5,000, and the probability remains high that gold will break out above 5,000 and continue higher in the coming week. So let's zoom in to the H4 chart, where things get even more interesting. On the H4 timeframe, gold closed around 49.90, reflecting short-term caution as price approaches the key psychological barrier at 5,000. It is likely that gold will consolidate sideways near this zone before eventually breaking above 5,000 and resuming its bullish trend. This structure gives traders a clear multi-time frame view. The broader trend remains intact, with the pullback seen as a healthy correction. Gold stays in a strong upward cycle supported by institutional and central bank demand, while the DXY rebound remains the key variable to watch. Let's move into the trading plan for the week ahead.
Trading plan, January 26th to 30, 2026. First buy zone, 4,600 to 4,655. H4 breakout, institutional support, round number, 99% price reaction. Stop loss, 45.97. Targets, 46.97 to 47.97 short, 48.07 to 48.97 mid, 49.07 to 50.97 long. Second buy zone, 4,700 to 47.73, round number, 95% price reaction. Stop loss, 46.97. Targets, 48.07 to 48.47 short, 48.57 to 48.97 mid, 49.07 to 50.97 long. Pro tip: false breakout? Wait for the retest, re-enter for clean profits. Remember, probabilities don't guarantee outcomes, but they keep us disciplined. Third buy zone, 4,800 to 48.35, round number, rising trend line, 90% price reaction. Stop loss, 47.97. Targets, 48.67 to 48.97 short, 49.07 to 48.47 mid, 49.57 to 50.97 long. Fourth buy zone, 9,100 to 91.15, nearest support, 85% price reaction. Stop loss, 48.97. Targets, 49.47 to 49.77 short, 49.87 to 50.27 mid, 5047 to 5097 long. Breakout buy. Wait for H1/4 close on 5,000, then buy. Stop loss 49.87. Targets 5027 to 5047 short, 5057 to 5077 mid, 5087 to 5097 long. Gold doesn't move randomly. It reacts to real global shifts. Subscribe and join our community for real-time alerts, institutional-grade analysis, and trade ideas built on structure, not emotions. Master Gold, master the market. See you on next week analysis.